Good evening and welcome to the ShadowTrader video review for Sunday, October 21st, 2012. Quite a rout on Friday in the markets, taking back the last 3 or 4 days of up move. So the big question now is, where do we go? In the last video, I was talking about coming to this area here of support. And if you recall, last week I was bearish, and my call was actually wrong, obviously, because we ended up going up. But after that failed here at a lower high and then rolled over big time on Friday. So now I think there's really no question that the channel line is going to be broken. The up channel is broken, and I think we come down right into here. Our next support should be 1400 in the markets. That's probably where the S&P is going to go. If we look at the Dow, similar situation. Looks like you've got the prior high supports here, which have now been tested multiple times. You have the test, then you have the retest, and here's where I thought again that it would break. We ended up making the one move higher, and now I think it's pretty obvious that at this point we should break, and the Dow will probably find support right in this area. Now, NASDAQ Composite has actually been leading the charge for some time and has already broken trend. I'm going to be watching the 200 MA in the NASDAQ in the coming week as 2968.23. Remember what I talk about all the time about indices being out of sync, how one of them will lead and the other will follow. It doesn't all happen at the same time. So now it seems like they're moving more in sync, where the S&P and Dow are now also moving down as the NASDAQ and the Russell, the more speculative indexes, were already showing some weakness. But as they're out of sync, it's important to note that the ones that are further down, they will support at times when you least expect it, and it will stop the decline in the others. So, you may be just pressing the bet lower, lower, lower in the NASDAQ, but you need to be watching for areas like this in the comp at the 2968 at the 200, and also in the Russell. So in the Russell, that trend line is right here. You can clearly see it. And that's going to bring some support into the Russell at this 810 level. So I'm going to be watching that as well. But again, in the bigger picture, it does appear that the S&P wants to go lower, and we will probably see a violation at some point this week of this 1420 support, which we know was key, taking us to the next support at the 1400. The profile, to me, seems to definitely support this. I want to show you guys something interesting here in the profile. Okay, so you can clearly see that we did have some elongation in the profile on Friday as opposed to prior sessions. And the question that you need to be asking yourself here is, was this selling initiative, or was it more of the old money selling of the reactionary selling that is usually done by the shorter term time frame? And I think that we saw a little bit of both. And the key is that we haven't really seen initiative selling in a while, and I think we definitely saw that, at least somewhat on Friday. There was liquidation at the open, where you have just a very thin profile, very few TPOs. The entire profile is somewhat elongated, which we haven't seen in a while. Notice that Friday's value area is defined by this bracket here, and usually price will move somewhat into value, or will at least retest a prominent point of control, which was here. This point of control is kind of wide and prominent. Notice that on Friday, price didn't get to it all, and they started selling it right from the open. Selling directly from the open is more of a sign of initiative selling. The larger time frame, they don't wait. They don't need a bounce. Whereas the more reactionary traders that are they're called the responsive traders, they need the market to lift a little bit so they can sell into strength, because they like to sell at turning points because they're going for smaller moves. The bigger money doesn't wait. They just want out, so they start to press it from the beginning. And you can see clearly that we opened high, and obviously we closed low, and they pressed it all the way down. My focus this week is going to be on two areas from this 5-day balance, which, as you know, the market had lots of difficulty a little while back getting through this 1420 to 1425 level. And when it had that problem, it formed some poor lows on the chart, which were here and then also here. I think these lows are very poor. And remember, when I say poor, it means that they don't have any excess to the downside. Like, this is an excess low, where you have more of a sort of a capitulation at the lows. This is a poor low. where the auction doesn't really end properly. So remember, when the auction doesn't end properly, you don't have a poor low. What's telling you that the market is getting overly short in the short-term time frame. The shorts are pressing it too much, and every time the market comes down to a low, they're not able to take it lower because the shorter-term time frame that's relatively nervous, so to speak, they tend to cover right away and push it up. And then what happens is you often have a danger of being caught short in the hole, and you get a rally. And I think that that's what we had over these couple of days in the early to mid part of last week before we hit the Friday sell-off, is that we had shorter term time frame just kind of covering their shorts, pushing the market up really quickly, and then it all liquidated very fast on Friday. And not just liquidated, but I think a combination of liquidating sellers from the 3-day rally before, and also new money sellers coming in and pressing the bet a little bit. Okay, so for next week, my focus is going to be very much on these poor lows down in this area, the 1420 to 1425. And remember that once the poor lows are revisited, they need to be repaired. And by repair, I mean that they will create some excess to the downside underneath them. Once they're revisited after you rally up, the odds are very strong, especially if you have multiple poor lows. And here we have 1 and 2. The odds are much, much stronger that the market will break through those levels and go a little further. So that's another reason why I think that everything is tying in for the S&Ps to move lower and test at least the 1400 area in here in the coming week. All right? Okay, so just to wrap it up here with an update on a couple of trades from last week. One of the ones that I talked about was the soybeans support at the 61.8 and at the also ascending trend line. And for me, that was an entry last week, I think on an overnight basis, somewhere down in here. I believe it was close to 1496 on these spike downs. We had a low here at 1485, somewhere in here, and then also a little bit higher. And then my basis on the trade was somewhere like just over 1500. And I actually learned a very important lesson last week because this is a product that I don't trade very often. But what happened was then the support kicked in as I expected. But during the day I was watching the beans and I had to stop here at 1485 right down here, right? So I was fine. And we had a move up and then a 100% retracement of that move. And I thought at the time that the beans should have acted a little bit more bullish than that. So I put a tighter stop at 1492, and I also took off most of the position at around 1504 for a small gain. And the reason I used the 1492 because it was the first higher low after the pullback here. So I thought that we were establishing an uptrend. And then what happened was the stop on the rest was taken out at the 1492. Overall, the position was profitable just by a little bit, but it actually ended up being very costly because there was a huge opportunity loss. Because notice that even though we did make a lower low here, I did end up being faked out because notice that this low didn't break the 1485, and then we were boom, like off to the races, and there was about a solid 50-point move here in the beans, which I didn't make. So I'm kind of chalking this up to lesson learned, and I think we can all learn from this in that sometimes when you have a low area that you have pretty good conviction on in terms of whether you have a fib or a trend line, sometimes the bottoming process can be more complex rather than just a one-shot touch and then boom, V-shaped reversal. So I'm going to take that into consideration for next time, and especially when I trade the beans, which, like I said, it was a new product for me. I really don't trade them very often. The other trade from last week that I gave you guys was the price line ratio spread. This worked out really, really well, and I had the 560 puts long and 2 times the 550 puts short, and that being because I was very, very confident in the support level here at the 550. And if you're interested in this type of trade, it's a really great trade because you can put it on for a credit and take it off for a credit. I mean, I put this on for a 45-cent credit and then ended up taking off the majority of the spreads down in here for a $1 to $1.70 credit. So put it on for a credit, take it off for a credit. And the mechanics of the trade are very well explained in an article that I wrote as a response to a reader of the Shadow Trader Weekend Update who wrote in. You can see here asking about, how did you do the ratio spread? I followed the trade, but he didn't quite understand it. And I think the article came out really well. So if you're interested in these types of spreads, I would ask you to go to shadowtrader.net and click on the blog here. And the ratio spread article should be the first thing to pop up. If you're looking at this after Sunday night or Monday morning after the blog is already posted, just remember that there's different categories here, and the ratio spread article is going to be here in educational articles. All right, and if you scroll down through, you can see it's pretty comprehensive. I've done a chart workup on it and a lot of detail on how to manage this type of trade, because I don't want listeners to think that this is just a trade that's a guaranteed winner. The trades are very, very forgiving. They work well in a lot of different environments. A lot of times, because you're putting it on for a credit, you either take it off for a credit or you just let it go out worthless. So I like the spreads very much, but they are, there is risk to every spread. There's nothing is riskless. So obviously, I do want you to read through the article, and I've got a lot of good trade management stuff there on the ratio spreads here. That's at shadowtrader.net/blog. All right, that's all I have for this week. On behalf of myself and the entire Shadow Trader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.